me see. Yo, what's up, guys? Welcome to Rebels Capital, aka Negativity with Success. And yes, came back with another video. Today is the 19th of March 2026. Please, man, don't forget, man, if you like the videos, please click like, subscribe. Yes, no, maybe so. Let's go. So, today, what's happening is we couldn't do a video yesterday on the 19th of March because of was waiting for the Federal Reserve to release their statement, right? So yeah, man, we're gonna talk about that one at the end. So far, ever since they've released their remarks, right, everything went down, dude. They did keep the Federal Reserve kept the rates unchanged. So yeah, man. Today, what's keeping it down is basically the sell off of the U.S. Iran. So like your Dow Jones is down 0.54, S&P 500 is down 0.67, basically it's at 6,580. Nasdaq it's at 21,954, down 0.90. So they opened lower and continue to sell off because of the oil. Energy is the clear winner today. Technology, mining, and software and the rest of them, they're down today, right? So basically what's dominating today, it's the bomb. Today is it's the Middle East conflict, basically, right? Iran attacked a energy facility in Qatar and South Pers gas field, right? That sent the oil going to 119. US gas as well is at the highest since 2022. This is surging basically fear and crushing rate cut hopes and triggering a risk of. Yeah, man. So everything that has been said there, yeah, it's killing everything. Fed, even if the Fed cut, there was still gonna be a lot of concerns on top of that. So yeah, man. Just to sum it up, right? Just to sum it up, what really happened is that Powell noted there's plenty to worry about, but ruled out stagflation, first of all. Second of all, was that traders place almost zero Fed cut in 2026. The Federal Reserve kept it at zero, basically. He didn't cut, he didn't do anything, he kept it the same. The analogy is that he's going to keep it zero cut because of his term is coming to an end, right? Well, his term is not really coming to an end. He got fired, basically. Fired, dismissed. I don't know how you put it, because it's an independent institution. He got dismissed by the person who appointed him. So basically, he got dismissed. Let's say that. And then the treasury yields are also jumping. That's the bonds that we're gonna go to, meaning that higher borrowing cost pushes stock down because a lot of companies need debt to fund their operational cost, and as well as their their growth, right? Growth. Those are the two things that are keeping things down. Gold and silver are also like safe haven. People are also trading that. So overall, in terms of your earnings report, let's see. Earnings report, we had Alibaba. Alibaba. If you don't know what earnings report is, it's something every company, public company, has to report every 4 months how much money they have made. So yeah, man, people make predictions on that if it's gonna be positive or negative. And then if it's positive, the stock price is gonna go higher. If it's negative, it's gonna go lower. Simple, plain, simple, and basic. So, Alibaba made a big miss, right? The predictions were quite, yeah, man. They made a big miss, right? Meaning that they didn't fulfill the bankers and the traders' predictions so far. But so far so good in terms of profit. It's bad, but it's not so bad. But yeah, man, they're down like 67% today. As you can see, the stock is down 8%, 8.15% because of the bad earnings, right? Second company that reported earnings is this one, Micron. Micron. Oh, by the way, Alibaba is a more or less of like a tech company. It uses AI. Yeah, man, it uses AI, and they have like a lot of things in it as well. They should have like a store in China or something like that, but they have a lot of companies in it, so we can't really say they have like one sector that's dominating. They have like a lot of things. Yeah, man, Micron is this one here. Current price is at 436 to be exact. 436. What they do, let me remind you what they actually do. It designs, develops, and sells memory and storage products in the United States, Taiwan, Japan, mainland Hong Kong, Europe, and internationally. That's what they do, right? It was driven basically by AI earnings and capex rep, but it still fell 5% on the news, right? It did well, but people didn't believe. So now it's at 5, negative 557. So yeah, man, like I said, if the bankers' predictions and economists' predictions don't meet the forecast, because everyone has a forecast, every company has a forecast, and then if they don't meet it, they get disciplined, if that's the word. They are set like a bitch. It goes down heavy. And then you get other companies like Acture, FedEx, Lululemon. Yeah, man, they did well so far. Let's open that up because the stock market hasn't opened as yet. We still have like a hour, 30 minutes to be exact. Let's say 30 minutes and a few seconds left. Here's another company that did well on earnings as well. Its current price is at 187.78 cents. It's up 1.86. What they do precisely, just want to remember, it provides strategy and consulting, technology and operation services. So basically, what they do is they offer system integration, application management, intelligent platforms, software engineering, AI, cloud automation, and global delivery services. So basically, it's like a software company. That's what they do. Anything software related, they do it. Even like your not cyber, IT. So that's what they do. It did well on its earnings. Let me see here. I think we can still open the earnings report. Just to show you an example, for example, let's see here. See here, it happened today, right? Earnings report is this one. This one here, the first one here, it was released today, right? As you can see here, they beat the EPS. That's the forecast, right? EPS is the stock price, right? It came up to 2.93, and the prediction was 285, and then the revenue came in at $18 billion. They did quite well. That's a lot of money, dude. And then their predictions was at $17.83 billion. As you can see, they did beat the earnings report. So that was one of company that beat earnings report, but it also went up. just a practical example just to show you what really happens. So it's up because of that today. So people are buying. So people bought a lot of stock of that. The next one is Lululemon. They sell clothing, to be precise, like gym clothing, gym athletic clothing. So yeah, man, that's one of those companies. Stock price is at 165 and 82 cent. It's up only by 0.4%. Let's see the earnings. Earnings report. It happened on the 17th of March, 2 days back. EPS was on 5.0 versus the forecast of 479. And then revenues, the profit they made was 3.60 billion. And the forecast was 3.58 billion. So they beat everything there. That's Gucci, Gucci. And next one, and then that's it in terms of earnings report. Then you have your IPO. The most spoken about so far is this one called Swimmer. Yesterday, Swimmer made 200. Was it 200? Wait, let me be corrected. I stand corrected. Jesus Christ. So yeah, Swimmer was one of the companies that made IPO. So it became public for the first time. Yeah, man. Public offering was at $5. Current price now is on 53.9. So from 5 until 53. That's crazy. People made money off this company yesterday. Yeah, man. So they're basically selling those war drones, basically. That's what they do. Swimmer. Yeah, it's like a software war drone company. It made 450%. That was retirement money, dude. If you made money on that one, well done, man. That was retirement money they did yesterday. And then yesterday another one was PayPay. It's a IPO, right? It's also a public offering company for the first time. PayPay, it's a payment process like PayPal. Basically, it's a Chinese-based company. Yeah, man. They were also higher. I think they did it today, if I'm not mistaken. If it was today or a couple of days back. But yeah, man, here's another company that did well as well. PayPay this week. It's up basically by 15%, right? So they went higher, public offering. Let me see. So current price on this is 1876. Not bad. 1876. It's up 0, it's up 160%. Let me see what's their public offering price. Let's see. I just want to see where they started. Okay. Let me see. No. Oh, so they opened at 19. Oh, public offering was at 16 actually, and then went to 19. That's not bad, bro. Not bad. That's the one that made IPO. That is up 15%. The other one is up 1,000% because it went from 5 until 53. This one, it went from 16 to 19, something like that. It's not bad. To 19, yeah, to 19. Now today's an 1888. Not bad. And then there's more that are still coming, but it's gonna happen end of March. And if we move on to the other segment, is insider buying. Insider buying is another interesting one. This is where the management, the CEOs, CFO, the VP, all the top management, the people who work in one office, they buy and sell their own company. And they don't buy with like small money, dude. They buy like 50,000, 100,000, 3 million. Yeah, man, that's what they buy normally. Today and yesterday, well-known companies, nothing. Okay, there is a company here. It's called Coupon. Coupon is a company that I like talking about. That was one of the biggest one. This guy, he bought Coupon. There we go. LLC. Let me just open that. The CEO name is Neil. He bought 7.35 million shares. That was insane, dude. That was crazy, actually. 7.35 shares are equal to, if you put it in cash, if you were to buy it, $135 million. Shit. He bought the biggest one. God damn. I don't know how he did that with that much amount of money. But yeah, stock price is currently sitting at 1963.64 to be exact, but it's down 2.24%. Yeah, man, that was one of the biggest so far. That was big. That was actually huge. That was one of the biggest purchases so far. And then another director, this director bought his own stock portfolio or something like that. Okay. Portfolio. Portilio Inc. So yeah, man, the CEO also bought one of these. His name is Lee Eugene. His stock price was 200. The shares he bought was 286,000 shares, which is equivalent to $1.48 million. And then another one who bought a big in his own company, the CEO, LAR Holdings. Yeah, some of these things go up. It was supposed to go up, but now it's down for some reason. But yeah, man, he bought because of he bets on the company to go even higher. Lawson Holdings is another one. LLC. Let's see what do they do? It designs, manufactures, and sells airspace and defense component for aircrafts, airspace, and developed systems in the United States. So basically, they sell parts for airplanes. Holdings. Current price is sitting on 64.2. It's down 2.62%. That's what's happening there with that one. But it's not so bad. They do make a lot of money though. 62. Damn. Yeah, man. The CEO slash director, he bought $3 million worth of shares on his own company. Imagine, bro, buying 3 million. 3 million. That's insane. No. The one with the biggest one so far was the one with the 136 million. That was the biggest one, bro. Coupon. Coupon was one of the biggest buying so far in 2026. And then moving on to the other news. I'm moving on to a thing called merger and acquisitions. Merger and acquisitions is when like a big company is buying a small one because of the small one has a technology that the big one wants. Just to summary it up, quick, fast, in a hurry. So, right now we have Uber investing up to 1.25 billion to 12 billion, right? And Riverend for up to 50,000 robo taxis. So that was a big one, bro. So they did a merger is like buying the company, and acquisition is you're paying the other company to do something for you. So it's like an agreement, basically, you guys have in a boardroom. But yeah, man, these always turn out to be beautiful. Beautiful, 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 beautiful. This is the company. Riverend Automotive. Um, if you know their cars, they have actually dope cars. I won't lie. The current price is sitting at $16.38. It's up 5.44%. It's at $16. It's doing well. It's doing quite well so far. If you don't know what it looks like, let me just show you what the cars look like. More or less, they're copying Ford Rangers. More or less, they look like Ford Rangers, all their cars. Majority of their best-selling cars. They're huge. They're more like family cars, but they're electronic. This is what these cars look like. They're not so bad. Not so bad. Not so bad. Not so. Yeah, man. It's worth looking into. Due to the oil prices going this high, so it's worth buying electric cars. Yeah, man. These are the cars. So basically, Uber invested in this company to make more of these cars so they can have self-driving cars, basically robo taxi. It's insane, crazy, man. I don't know why they chose this one to be specific. Yeah, man. Yeah, man. So some of your guys' uncles won't be Uber drivers anymore. Which was bound to happen in any way. And then the other news was from a company called New Age Advisors bought Stone Gate for 6 billion, right? The Senate Wealth Group, Heritage Financial. So yeah, man, those are the other news. And then Public Storage acquiring National Storage affiliate in an all-stock deal for $10.5 billion. Here's the company, the National Storage Affiliates. This is a small cap company. It's been trading quite well the whole of March, actually. Coming up to this news. So people what normally do is when it comes to these M&A, right? When they hear people went to a board meeting for this, right? They intend to buy it slowly. Look at this shit. You know, even higher, bro. This thing went from 30 to 38 on the news. So normally what happens is like as soon as there's like a rumor about a company buying another one, people buy it slowly but surely. Like this one, people bought it 2 weeks before when they heard the rumors about it was gonna be bought and a $10 billion all stock. It's an all stock deal. Beautiful, man. Yeah, so that's what happens. So now it's running higher today. And then yeah, man. So as you can see, for example, Public Storage is a big company and a National Storage affiliate is a small company. So yeah, man, it's one of those things, if you can't beat them, you buy them. Basically. Story. If you don't beat them, buy them. As you can see here, Public Storage. See, Public Storage is a big company. Stock price is sitting at 277. Yeah, man. Any company that goes above, let's say, 80, it's a big company. If the stock price goes above 80, it's a big company. in terms of like in general, they make a lot of money. And then there's another one called Citrus. Let me just see here. Citrus. Here we go. Citrus Corporation. It basically bought another company called UniFirst for $5.5 billion. Current price for this company, it's sitting at 185 and 22. It's down 0.12%. So they bought what is this? UniFirst. No. Is it UniFirst? Yeah. UniFirst in a $5.5 billion deal. So it happens that the big company will go down, the company that's buying it will go down, but the company that's being bought is up. You understand? As you can see here, UniFirst is up today. Stock price is sitting on 268. Let me just go down a bit. Yeah, man, 268. It's up 10%. Yeah, man, that's what's happening there in terms of M&A. I wonder what they do. Yeah, man, there's a lot of companies, man. Fuck, man. Yeah, man, it's another example. If you can't beat them, you buy them. Plain, simple, and direct. The next one is we are going to the crypto, actually. The crypto is going up, actually. Or should I go to the bond market? Let's see. Let me see. Okay. Let me run through the bond market. What's going on the bond market? Let's see. Perfect. There we go. So, if you don't understand what's going on in the bond market, right? Bond market is very, very simple and direct. As you can see here, what you normally look at the yields, right? The yields are the most important thing you look at in the bond market. Like the 30-year and the 10-year and the 5-year and the 2-year. Those are the top 4 most important ones, right? So with that being said, when the yields are jumping, they're basically jumping across the curve because of inflation and oil shock, right? With that being said, just to simplify it, what it means for you is that as soon as you see the treasury yields are jumping high, as you can see today, it's up. Not just the 30 year is down actually by 0.61%. The 10 years up by 0.28, 5 years up by 0.78, 2 years up by 1%. 1.71%, right? What that means is every time these are green, the 10-year, the 20-year, the 5-year, and the 2-year, the higher, it means that there's higher borrowing costs. With that higher in borrowing costs, a lot of companies are relying on what? Debt to run their companies, right? So, basic economics, the higher it is to borrow, the higher it is for us, the more expensive and challenging it is for us to borrow. Meaning that our companies, majority of the companies are run by debt. So as you can see today, a lot of these public companies are down because of what? They have a lot of debt happening. Plus the oil price is also crushing it, yes, but they have a lot of debt. So they need debt to keep operational expenses, one, and also to expand, to grow as a company. Those are the two things they need at all times at these big companies. Some companies that do not have debt are doing well. Some are doing horribly because they have a lot of debt to run their business. So that's why the yields are bigger than the stock market. Just to summarize that up, right? And then investment grades are also spreading. Credit markets are also holding, but defensive. Valuations are rich, and geopolitical is adding volatility. So as you can see here, where is my picture? There we go. So here we see a thing called the VIX. VIX is an indicator to show that if there's fear in the market overall. As you can see today, it's above the 20 again. It's above the 20. Today we're on 25. It's up by 2.95. So yeah, man, that means there's fear in the market. Anytime, every single time this is positive, the stock market will also be negative. So the bond market and the VIX, as soon as those two are up, there's a bit fear in the market. It's plain simple and direct economics. So yeah, man, that's what's happening there. And then if we go to the stock market, right? If we go to the US dollar, there we go. The US dollar. The US dollar. Wait, why am I spelling it like that? US dollar, yeah. USD. I'm looking for USD currency. I'm looking for the index actually. So here, as you can see here, as the US dollar. This is the most important one because of the US dollar is like still the most bought currency in the entire world because of everyone uses the US dollar to exchange internationally so far, right? It's the medium one. So every time people want to buy and sell internationally, they convert it first into dollars. But that has changed in terms of other relationships in different countries because we're in 2026. Everyone wants to get out this thing. So yeah, man, this one has been gaining ground on basically higher yields and delayed on cut rates expectations. So far, the Japanese yen, the British pound, and the euro are reaching their respective central bank holds. So everyone there in the Japanese, British pound, and the euro, their central bank also put everything on pause. So they had. Okay, I'm going to talk about that later on actually. So the Federal Reserve in the United States, the ECB, which is the European Central Bank, the British Central Bank as well, they had a meeting this week all in one time, in one day, which was yesterday actually. But yeah, man, let me move on to cryptocurrencies. Cryptocurrency here. Let's see. Yeah, man, so far so good. So far so good. Let me see. All cryptos, they make $2.4 trillion. So as you can see here, cryptos are basically positive today. Yeah, man, 90% of them. Bitcoin is up. Ether is up 3%. No, Ethereum is up 3%. Ether is down. XRP is up 5.15%. Yeah, man. Let's see. Ether BNB is negative 147. USDC is up 0.01. Solana is down 1.27. Tron is up 0.45. Dogecoin negative 147. Hyperliquid 4% down. 4% down. Let's see here. It's because of, in the last 24 hours, Bitcoin is down like 3% actually. It's not up, it's down. And in the last 7 days, it's up. In the last 2 days, it's down. Okay. It's just some of them that are up. Yeah, man, it's just some of them, not all of them. But Bitcoin is basically up by 3%. It's playing around that 71,000 and 71,071. That's where it's playing around. Let's see. Yeah, man, it hasn't been moving that much actually. Currently it's sitting on 69,358. Yeah, man, that's the current price of Bitcoin for now. Yeah, it's actually down 2%. Ether 4. Jesus. It's true when it says when it's dark, it hails everywhere, bro. Like everywhere, bro. It's down 3% as well. Yeah, man. So far with that one, it's that the fear gauge, the fear and greed gauge is at 34. So that's like more or less the VIX. It's similar to VIX to show that there's fear. 34 means that there's fear. Other companies, other Bitcoin are doing well. Ether is mixed as well. Yeah, man. So that's it so far. With that being said, okay, so the last one we're gonna look at is the Federal Reserve. Let's go to the meeting actually. Let's watch. Fed. So basically what you look at when you read the news of the Federal Reserve is the tone. Is he positive or negative? That's it. That's all you watch. That's all you care about, if I'm
percent this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February.
Wait, let me just put in the subtitle.
And that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Okay, just to summarize that 4 minutes. Just to summarize it, what he meant was he wasn't speaking English. So he kept the the interest rate unchanged actually, and decided to keep interest rates steady at the price range of 3.5 to 3.75, marking the second consecutive hold in 2026, right? So far, people are not sure. So no acceleration basically towards more aggressive easing. So meaning that they're gonna lower what they did during COVID, of like giving out free money to people. So they just reducing that on their balance sheet. That's the first one. They're also looking at inflation. It's slightly higher right now. The PEC inflation expected to be at 2.7 for 2026. With consistent risk from geopolitical, like your Iran and oil, right? So basically what he was saying, that he's emphasized on data dependence, so there's no rush for him to cut due to sticky inflations and uncertainty from the Middle East, but it seems like the eventual progress towards the 2% target. So yeah, man, he's just basically saying we're not supporting the stock market today. We don't care. We're gonna keep it the way it is. You guys can relax. So he's basically like more hawkish. Hawkish is like negative. For hopes for a faster cut, but the market already priced in no immediate easing. So some traders are saying that there will be no cuts in 2026, which is going to be quite bad for companies, right? Yeah, because like I said before, companies need a rate cut because of they need to borrow money, right? And majority of their companies is run by debt and credit card as well. A lot of people, debt is not just like going into the bank and asking for a loan, like credit cards. So yeah, man. So here what we see is that companies with, so if we compare it from a small business to a big business, right? With the small businesses, they need credit cards to keep going, right? To support their operational expenses and also for growth. That's what Donald Trump wanted, right? Donald Trump wanted his economy to have more growth than any other economy in the world. So now with this being at the same position, that is not happening. It's basically at pause, like it's like paused at the moment. So meaning that it's very challenging and costly to ask for a loan or a credit, right? To increase their credit. So yeah, man, that's what's happening. It's quite negative for small businesses. Any businesses that's making around less than 1 billion every month, every year. Any company that's making less than 1 billion, they're gonna suffer. And then the bigger ones, they also, depending on their balance sheet, right? If they have a low debt, yeah, man, those things come into play when those things come around. So yeah, man, it depends if you are invested in companies with zero debt or companies that have a very good balance sheet. They'll be able to survive. So it doesn't matter. So yeah, man, it's a 50-50 thing. So, but small companies need a cut as soon as possible. The big businesses that make over 2 billion and above, not so much. They don't really care. It's like someone who buys at Gucci, right? If they tell them that Gucci increased their price for a shoe that was like 5,000, now it's 10. They don't give a fuck. They will still go in and still buy the fucking Gucci. But for someone who has 2,000 and gets to a Gucci store and they say it's 10,000, obviously they're gonna run away and go somewhere else. That's what is basically happening between a big company and a small company. That's about it basically with those situations. And then we still have news from that are coming up actually. It's the it's the other one was the Bank of Japan. It's also held at rates on 0.75. That's another economy. Bank of England, British England, Bank of England, it held their rates at 3.75. It's also unchanged. And then another one, Bank of European Central, the European Central Bank, rates were held at 2.15. Miss Christine Lagarde, right there. So yeah, man. Just to summarize everything there, that's what happened in the last 24 hours of the stock market, man. Yeah, man. If you wanted to explain in further, man, I'm just gonna drop off Discord below. You can join the Discord. You can join my chat. Join my chat. But if you like the video, man, please click like, subscribe. As usual, yes, no, maybe so. Let's go. Thank you for watching. Obrigado.